On July 7th, MSTY paid $1.24 and 96.86% of that was a return of capital. Return of capital is one of those topics that a lot of people confuse about this, and there are a lot of questions and misconception about return of capital. This is one of the hot controversial topic a lot of people talk about, but there's one more topic that people also like to discuss, and there is a lot of misconception and misunderstanding about this, and is on NAV erosion. As you can see here, this is a Tesla NAV, net asset value is 772. For people who don't know, net asset or NAV is the amount of money that the fund is valued at as compared to the share price that's been traded on the open market. For example, here you can see the price of OT is 629, NAV is 623. And the reason this happens is because it hasn't reflected the price change of today. But if you go to official Yieldmax website, you will see that NAV changes from 623 to 629 or 628. There's always a little difference between NAV and open share price on the market, and that's because of the fees that you're being charged. In today's video, we're going to get explanation of these two topics, NAV erosion and ROC or return of capital. And this is a clip I get from Marco's channel, who was interviewing Michael Venuto, co-founder of Tidal Trust, the company that manages Yieldmax ETFs. So guys, in order for you not to miss this type of important update, make sure to subscribe to this channel and hit that notification button wherever I release a new important update you always receive. And if you like my content, please smash the like button and don't forget to share with someone who you think this video might help. Let's start.
You can't just look at these things as a panacea. What people call NAV erosion, I don't believe in that term. It's relative beta, which means if the stock goes down, your yieldmax fund is going to go down too. That's not eroding the NAV. That's relative beta to the underlying stock. I don't know why people don't understand sometimes that when you buy a yieldmax fund, you're basically taking almost as much downside as buying the underlying stock. There's a slight difference because you have some call premium, but it's not different enough. So if MicroStrategy drops 50%, you should expect MSTY to be down 45%. I want to make sure everybody's heard that. Right? Tips for using them, I prefer ymax. That's the one I like the most.
So that's Michael explaining what NAV erosion is. Now let's go to next topic, ROC or return of capital.
What is one thing you think that investors are getting wrong about yieldmax?
I think because of how these two regulatory agencies work, the IRS versus the SEC, the return of capital thing confuses everybody because it sounds like we're returning your own money to you. And that aggravates the SEC because it's not what they like. They don't want it to be that. If that's all we were doing, they wouldn't let us launch the funds. They wouldn't approve it. On the other end, the IRS wants us to code options income as return of capital. So it's a really confusing mess. And then even then, like it happened last year, MSTY was almost 100% return of capital. And then it went on a run, right, straight up, and it was no longer return of capital. We're never really returning capital. Like if you really look at it, then we've returned almost very, very little true capital. And it's usually because we're at the year end and something missed its dividend and we want to keep it the right way. So I'd love to get that clarified, but I don't think it's something that it's easy to understand because you have two different regulatory bodies asking you for different answers.
Every time I make a video on a distribution update, I always address this question of return of capital. I always say, in order to understand return of capital, you have to go to your statements. In your statement, they're going to tell you how much that income you have received came from return of capital or came from qualified dividend or came from interest. That's where you're going to get information. And if you are an investor who is investing in non-taxable account, then you don't have to worry that much. But if you're investing in a taxable account where you have to pay taxes every year, you're going to get that tax slip, and that slip will give all the information that you need to file your taxes. So guys, when I saw those two questions were always been asked in this channel, I thought it's very important for me to make this video to give you clarity on those two topics. So I hope you understand what return of capital is and what's a NAV erosion. What do you think about the interview? Did you like the answer? Leave your comment below. Thank you very much for watching, and don't miss any of updates by subscribing, and also don't forget to smash the like button. I'll catch you next one. Bye bye.